as you guys know, I jumped into this morning, so I don't have like a super funny presentation, but I know it's actually the most fun because we're going to go over a home and an auto policy.
Yay!
How fun! Oh my God! Raise your hand if you have insurance in this room. Who better raise your hand there? Okay. All right. That was one question. Okay.
So we're going to review a policy?
We sure are. And we're actually going to review this really great male model named Kevin Peterson policy.
He's got great hair.
Some gray hair right there. So, I don't know if you all can see that. Whatever. But, okay. So this is a home policy. This is a Farm Bureau home policy. Obviously, if you're at a different company, it's a little different. Ours is very colorful and really nice. So, the top there, we're just going to run through piece by piece. That won't take too long because I go over this for 20 minutes. But top there is all your main information, where you live, who you are. On the side, your payment premium. I should talk about age about that. That's looking a little high. And you can be right there. So then we go to this stuff here. This is all the information about the home or the location or wherever it is. And protection class is how far away you are from the fire department, basically. Tell you what fire department is, all that stuff. Roof years is really important as well. Yeah, that's pretty much basic information in there. So we're going to get to perils insured against. What a peril is what stuff that insurance covers, right? So there's a hazard, there's a peril. So there's two different types of perils. There's broad perils, as you can see there, and special perils. Special perils would be like, you know those commercials where it has the, we've seen it covered at the, what is that, farmers with a little jingle that have the weird claims, like stuff falls on cars and they cover it. It's, see it covered it. That's what special perils is. Special perils is anything that could be a loss that isn't listed as excluded in the policy. So like earthquakes and stuff like that, that's excluded. But like, we don't have to worry about that here. So, and all that's in the policy verbiage. If you want to read your own policy, that stuff should all be listed. Stuff that's not insured. So, broad perils is just a list of 13 perils. I don't remember what they are. You can look them up, but that's what those are. Loss evaluation. So, as we can see, there's a number here that's $271,100, right? So that's replacement cost. I know Zach knows all about this, but the replacement cost is what it would, according to the program I plugged all the information into, is how much it would cost to rebuild the home if it burned all the way down to the ground. Now, one very different distinction, or important distinction, is market value versus rebuild value. Market value is often higher, because if you have a home on Lake Michigan that's $3 million, but it's a 500 square foot house, you think it's going to cost $3 million to rebuild that house? Probably not. And that's the market value, because it costs more to buy than rebuild. So, according to my RCT program, that's what it came out to be my house. And very important thing too, I did not practice this also, so I'm just kind of going off the cuff here. So forgive me if it's a little. So, extended replacement cost gives you another 25% on top of this. It's really important because you think, oh, man, I don't think that's enough. Get another 25% on top of that. You're only getting rated on this. That's where the price comes in. So, other structures are swing sets, sheds, pole barns, anything like that. And all these numbers can be adjusted however you like. Personal property is the way I always explain to customers. If you rip the roof off your house and flip the house over, all the stuff that falls out is your personal property. So that it's not like your carpet, your cabinets, all that stuff. So all the stuff falls out, personal property. Loss of use, basically that's straightforward. As you live in your house, you get however much money it costs you to be displaced from your house, get rent somewhere, blah, 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 all that stuff. So, those are the main things on a home policy that are covered that most people don't understand. If you want to go over more of the stuff with me, happy to do a one-on-one with you, whoever wants to. And I can quote your stuff if you don't have me or from here. So, super cool there. We all see it, okay? Alright, so this is just another coverage section here. This policy has like a bunch of junk right here. I most of them don't have that. We don't need to get into all that for sake of time. But this is just another endorsement that Farm Bureau has for just little things, money, metals, jewelry, theft of silverware. Now, if you have expensive jewelry, you want to list that separately. This makes it separate deductible. The ones on this policy in particular, the ones that are below my $1,000 deductible are not subject to the deductible, which is important to know. Because, you know, it wouldn't make sense to pay $1,000 for $500 of money in metal. Okay, so, yeah, all these things, food spoilage, like the freezer goes out, and you have big cow in there, you can get $500 to replace that. At least with this policy, whatever you want to do. So, residence glass endorsement is if, and for whatever reason your window breaks in your house, it's no longer subject to your deductible. So it's like $11 a year to have that, and because I don't know how much windows are, but they're not $1,000 per window. So more than likely you won't have to pay up to $1,000. So that removes that deductible, so it's covered. Any questions on any of that stuff? I just want to hop through that really fast. Questions? No? Okay. Now we're going to go to a really cool auto policy, which is also mine, but I put a fun little car on there. Porsche 911 GT3 RS. Amazing. I was going to do a Lamborghini or Rolls Royce, but it wouldn't pull in my system, so it would rate right. So anyway, as you can see, this is an auto policy. This is my auto policy. I don't actually have it, obviously. So going down here, we have the very important section that we always should review every time we look at our auto policy. The liability. Everyone should have at least $500,000. If you own a home, you should have at least $500,000. That might be my opinion, yes, but you should always have. You should have at least as much in liability as you have in assets, or like what your house is worth is what I say to a lot of people, because most people have $300,000-$400,000 house ish. Not everybody, but most. So that way, same emergency can't go by if you injure someone in an accident and take all your stuff, which is also why you should have an umbrella too. We'll get to that. Property damage liability. Let's say you run into someone's business or your house. That's how much if you have a liability. That's standard, $1 million per accident. Hopefully, you never have to use that. This is a big one. Personal injury protection. I know Stephen and I talked about this. Is going unlimited with the medical. I could go on a 25-minute spiel about that, but I won't. Always do unlimited. It's a short answer to that. Always do unlimited. Don't opt out. It saves you money, great, but it's not worth the $150 a year per term that you save in that. So always have the unlimited. Going down to the deductibles here. I know I'm skipping over a couple stuff. Actually, let's do the uninsured, underinsured motorist. I don't know why they match. I should adjust that. But uninsured, underinsured motorist is when you have, doesn't really apply in Michigan because it's no fault. And what no fault means is if you get in an accident, like say get in an accident with Matt, it's nobody's fault. That means each insurance company pays their own claim. It's not like you could take no accountability for the thing. It's like, oh, I smashed it, but oh, no fault. So, yeah, it's really stupid. So each insurance company pays their own damages. So what underinsured motorist is let's say I run into Caleb and he has, and I have no insurance. And Caleb has great insurance. And it's my fault. And he goes after me in a different state where it's not no fault. I got nothing. So then his insurance company would step in and pay the damages for the underinsured, uninsured motorist thing. Which is really important to have, but again, no fault kind of makes it tricky. We don't need to get into the weeds about it, but important coverage to have. And they also all should match most of the time, which I'm not sure why. Maybe it's because I put that car in and I messed it up, but yeah. Some agents make this really low to save money, but as you can see, it's only $17. And this is only $60. So deductibles, obviously we all know what a deductible is, right? Anyone not know what a deductible is or what it does? It's okay, raise your hand if you don't know. So obviously if you make the deductible higher, they'll lower your price, but then you're basically not looking for that amount of money. Emergency roadside is always included in Farm Bureau policies that I do personally because that's stupid not to have it. In case you can fix your car on the side of the road with one wrench, I don't know, or tow it somewhere with your own string. Yeah, so property damage liability, $3,000. Rental reimbursement, that one is great because, let's say you total your car or something like that, or an insurable claim, not your transmission goes out or something. You get a rental car for $50 per day, up to like 30 days, I believe you can have as a maximum you can get. So that'll be an enterprise. You should do Turo with that too. Do pretty good.
Yeah.
I had a question.
Yeah, for sure.
I thought I was heard no fault insurance, but someone got a ticket. I thought it was their fault, and your insurance company went after that person's insurance.
There is situations where you have that, but if you hit someone, it's still your fault. like let's say I smash it in half because I was negligent texting and driving, it's still my fault.
Yeah.
It doesn't release liability of me being at fault at all. It's just who will pay the damages for my car and their car. Each insurance company will pay their own.
Oh, you would take all of that, even
No.
if it's your fault.
No, that's why it's no fault. So again, it's not.
That's only if it's your fault.
It's you're still get a ticket.
Right.
You can still get a ticket. You can still get a ticket.
Right.
Just because it's no fault doesn't mean you'll get a ticket. I mean, it is good. You know what I mean? You
The
don't-
one insurance company
Correct.
doesn't go after the at fault.
In other states, they do. I don't work in claims, so I can't really answer that. I'm not licensed to answer that very much. But there are situations where you can go after it, like a mini tort or something like that. We don't need to get into that. But there are situations where you can go after that. In terms of liability stuff, yes.
Because I just quick question. We got hit in the parking garage, and insurance covered everything without a deductible because no one was in the vehicle when it happened.
Again, it's very situational things too, and it depends on the company as well. I'll go one more thing with comprehensive collision. So the difference between comprehensive and collision, I'll scroll down so you can see those. Comprehensive is anything that is not you hitting another vehicle. So you hit a deer, that's comprehensive. Tree falls on the car, comprehensive. House falls on the car, might be home policy actually, but comprehensive. Hitting another car, collision. Unless you can prove it somehow that something came up here at Meyer and somebody smashes their grocery cart into your car and you were inside, you get the camera footage that someone smashed the grocery cart in, could be comprehensive. So when you're not hitting another car, comprehensive.
Good question. What about when the wind blows that cart into the cars? Because I ran after cars, like trying to save cars.
Again, you gotta get the video proof for it to be comprehensive.
Yeah.
Let it hit.
Wait, like collision, if there's a big old scratch on the other car?
Again, situational, but it depends how it got there.
Like, I don't like, but we're gonna ask all.
Yeah, I'm not licensed to make it. You can ask me. I can't say yes. I'm driving a better place. I'm driving a less sketchy neighborhood, really don't throw it. So, it was actually his wife.
With my wife, I called him, he's like, yeah, you're just gonna have to make it look, it's gonna look like that.
Yeah, so, any other questions? That's basically a really brief run through of home and auto policy. Yes, great.
All right, I got one. So we're no fault state. Let's say I'm driving in Arizona and someone hits me, and it's their fault all the way. How does that affect me?
Again, very situational, and that's a claims related question. I don't know, actually. Because your car is insured in Michigan, but theirs isn't, assuming that it isn't. I don't know. That's a good question. Again, a lot of your questions are
Also,
false.
the state where it happened.
Oh, it's-
Yeah.
More than likely, yes.
One last question for you, Kevin. Why Farm Bureau?
That's a good question. Well, I started Farm Bureau because in college at Davenport, I had an internship at Farm Bureau. And I worked for a guy named Bob. And I've told you guys about Bob before, somebody was, I don't know. But I was his intern, and they just called me out of nowhere when I applied for internships in the summer of like 2020. And I'd never done insurance before, and the guy was like, why don't you do insurance? Freaking insurance is. He's like, all right, just come on in. So I learned how to do insurance, and then it just happened to be with Farm Bureau. And I like Farm Bureau because it's a state-by-state operation. You know, it's a big company, but it's also a rather small company compared to the Patrick Home State Farms or the J whatever, or Flow and Progressive, all those. Much smaller compared to them. So it's a lot nicer, and it's easy to talk to underwriters and customer service people. You could probably call them anytime and actually talk to a person rather than you just being a number and all that stuff too. So, and I said this in my first presentation, but if it was up to Farm Bureau, everybody would sing Kumbaya and sit around a campfire with their customers every week, because that's how Farm Bureau likes to do it, and they like the relationships with the customers a lot, and that's really important to them. So they'll never have the app. They'll never have automated stuff that you can do yourself. They'll never ever do that. Old school, but kind of a good school, because old school still works. People still like old school. So that's all I have.